Welcome back here to Live Now from Fox. This is Andrew Craft. Well, you'll be paying more for a mortgage this week. The average long-term U.S. mortgage rate jumped to its highest level in a little over 20 years. The average rate on the benchmark 30-year home loan jumped to 7.09%. That's according to Freddie Mac. We got that in just today. It's the highest since April of 2002, when the average rate clocked in at 7.13%. We want to talk about this even further, what it means for the housing market, what it means for the overall health of the American economy, and we're going to do just that with Uri Man, CEO of Lagoon Management. He joins me now. Uri, thanks for being with us. I know we've talked to you a lot in the past about the housing market, but I guess the conventional wisdom right now is you really shouldn't buy a home. Do I have that right? Because it's so expensive to get a loan.
Well, it is expensive to get a loan, but people today, they don't have a lot of options. The market is really freezing up. There's almost, even as interest rates continue to creep up, there's no supply. We're really in uncharted territories at this time.
I guess the main question I think a lot of people have is there any light at the end of the tunnel? We know we got the CPI numbers for the month of July. Inflation ticked up just a little bit. Jerome Powell at the Fed raised interest rates yet again last month by 25 basis points. Those are all a confluence of factors when we're talking about mortgage rates, right?
Yeah, absolutely. Most of the economists right now are looking at the next 12 months. And if you look at where interest rates are, they're projecting that interest rates will come down, that we sort of are at the end of the anxiety, that we believe that we're getting inflation under control. We haven't seen that yet, and if the economy continues to stay strong, we definitely could see interest rates move up to 8%, perhaps even higher. That is not going to have a big impact on the housing market at this point because there's so little supply on the market. People have no choice. If they want to buy a home, the only place they can actually get a good interest rate is to go to a new home builder. For example, in our master plan communities, we have some great builders that are selling homes, and they are buying down the interest rates to attract buyers. There's so little inventory in the market that these builders continue to have one of their most profitable years ever. The last 5 years have been extremely profitable for new home builders. So those people who are currently in their homes, they are not willing to sell because everybody knows if I sell my home today, I'm going to go out and buy a new home at a much higher interest rate. And so really, who does the higher interest rate affect? Not the majority of Americans, but only those that are really looking to buy homes. And with inventory at such a low supply at this time, there's no indication that the housing market is going to have any sort of correction anytime in the near future.
Okay, so inventory is low. I mean, the interest rate this very same time a year ago was on average 5.13%. So it's a huge, margin there just over a year ago. But I guess I'm kind of curious. You're not anticipating like a crash in the housing market because of this. It's going to stabilize eventually because this, to your point, it's not affecting those who already own a home.
Yeah, right now the inventory is not growing. As you can see, there are not lots of signs on the street with people selling homes. Nobody wants to sell their home. There's little. And so the only opportunity to buy a new home is to go to one of these new builders in a new master plan community. There's very little inventory for sale. But the thing that people continue to talk about is affordability. And you're right, with interest rates about a year and a half ago, for a mortgage payment of about $2,400, $2,500 a month, you would qualify for a $600,000 house. Well, today with that same payment, $2,400, $2,500 a month, you're qualifying for a $400,000 house. So affordability, what you qualify for, has been slashed. We have dramatically cut the affordability of the purchase equation. You can afford less home. But with so little inventory on the market, there's very little chance that the prices of homes are going to be corrected anytime soon. In fact, most economists are saying home prices are still going up 2 to 3% over the next 12 months, even with interest rates creaking up or moving in the direction of 8%.
Yeah. I just want to quote from Freddie Mac's chief economist. His name's Sam Cater, and it's kind of what you have been saying. He said, quote, The economy continues to do better than expected, and the 10-year Treasury yield has moved up, causing mortgage rates to climb. He goes on to say the last time the 30-year fixed-rate mortgage exceeded 7% was last November. Demand has been impacted by affordability headwinds, but low inventory remains the root cause of stalling home sales. Do you anticipate or forecast that that's going to change, the low inventory aspect to this? Are they linked? Are they one and the same? If there's high inventory, will the mortgage rate go down or not so?
Not necessarily.
Okay.
The thing that we have to look at today is that people have so much equity in their homes. There's no reason to sell. We have extremely low unemployment. People are employed. There's no reason to sell there either. You have tons of cash buyers. We actually have the strictest lending standards in the history of the country. So people who are purchasing homes today are qualifying to buy homes. It's not like, in 2008 when people were buying homes who were just clearly unqualified, didn't have jobs to support mortgage payments. Today, the lending standards are very strict. So those people that have purchased homes in the last 5 to 10 years, they have really been qualified. So there's not a lot of reasons why you would see people suddenly dumping homes on the market. That could change, of course, if there's a huge recession and tons of layoffs and companies going out of business. But that's really not the direction the country's headed right now. So we have a bright future for the housing market.
All right. Just last thoughts here. What will you be watching for? From what I understand, this kind of fluctuates week by week. But what will you be kind of looking for next week and the next months ahead?
Well, one of the things that's very interesting is these higher interest rates have really put a huge freeze, not just on people selling their homes, but on the apartment development market. So apartment developers are canceling projects. They're basically looking at their apartment projects and saying, I can't build this project because when I have to put permanent financing on my project, it becomes negative leverage, basically. So suddenly, developers that might have built 5 projects last year are building 1 or 0 projects this year. So there's going to be less apartments available for rent. So rents are going to continue to go up. What happens when rents continue to go up? That has effects on the housing market because more people want to buy. So we're almost like in a little bit of a vicious cycle here where there's no short-term scenario, in my opinion, that the housing market could see any sort of correction.
Okay, yeah. I'm a renter, so hearing what you just said there does not sit well with me. So, Uri Man, as always, we'll definitely be bringing you on again to talk all about the housing market. Thanks so much.
Thanks for having me, and go blue.
Yeah. All right, let's keep it moving here. We're approaching the top of the next hour. We're going to kind of still keep hitting the top headlines.